Hey! In today's educational video, I'll be delving into the analysis of the initial 2 hours of the US 100 index, utilizing a 1-minute time frame. As we explore this fascinating subject, remember to hit that like button and subscribe for more insightful content. To kick things off, we observed the market's opening with a bearish candle, crossing below the 200-period exponential moving average. This particular candle provided a strong hint of a potential downward movement in the market. Around 4 minutes after the first candle, a retracement occurred towards the 200-period exponential moving average, shaping an intriguing inverted hammer pattern. The closure of this candle marked the onset of a substantial gap, underscoring the robust presence of bearish sentiment. The subsequent price action painted a picture of decline, marked by a series of consecutive bearish candles. Following this bearish phase, a 50% retracement unfolded, accompanied by an engulfing candle that signaled an enticing sell opportunity. The pattern's message to sellers was clear: maintaining positions could prove advantageous. Another noteworthy selling juncture arose with the emergence of a double top pattern, highlighted by a potent inverted hammer. As soon as this inverted hammer concluded, sellers entered the scene, triggering a downward price movement. After the price went down, the bulls staged a comeback, spearheading an upward trajectory that translated into higher highs on the chart. This presented traders with a promising entry point during a minor pullback. The appearance of the hammer pattern within these pullback zones provided traders with an optimal moment to engage. Upon reaching the 200-period exponential moving average, we encountered yet another exciting trading opportunity. Some traders referred to this pattern as a tweezer top, while others recognized it as a bear 180. This unique pattern pointed toward a significant momentum reversal. As the candle concluded, a gap materialized, precipitating a subsequent decline in prices. Thanks for watching this video. If you found it helpful, please give it a thumbs up and consider subscribing so you won't miss more videos like this.